Bruce Berkowitz is a bottom-up value investor in the Graham and Dodd tradition. As a matter of fact, he was one of the handful of leading value investors chosen to introduce a chapter of the latest edition of Benjamin Graham's classic, Security Analysis. Berkowitz's now $10 billion Fairhome Fund, a five-star Morningstar favorite, will celebrate its 10th anniversary at the end of the year. But its approach, which has delivered market and peer-beating annualized returns of more than 12%, remains the same. He and his team run a tightly focused portfolio of about 15 to 20 stocks and hefty cash positions averaging around 17%. And despite the increasing lure of overseas markets, Fairhome is sticking to what Berkowitz calls his home team advantage, investing in U.S.-based companies. As if his job were not challenging enough, the former bond manager is going back to his roots and will be launching a Fairhome bond fund in the new year. A man of many memorable lines, one of his slogans is, "The right time to invest is always." I asked him, what about now?
It's probably as good a time as any time, because after all, investing is just an equation of what you pay and what you get, and there are more than enough situations today where you get so much more for what you're paying today.
Let's talk about some of your top holdings, because if an outsider were to look at the Fairhome Fund portfolio, there would be some quizzical looks, and some people would say, what, is he nuts to be investing in these companies? A couple of your two largest holdings, Pfizer for one, and Sears. Why Pfizer?
Investing is all about what you pay and what you get. And for the prices we paid, we think the amount of cash that owners will eventually get will show a nice return in a company with a very solid AAA-like balance sheet, run by a fairly new management team that's heading in the right direction. Very defensive, recession-proof. Everyone's, again, with the new administration coming down hard on anything that's health-related. It's caused the price to really ratchet down, and the stock price. So that was the advantage. It was really the cheap price relative to the cash flows. So
what's your excuse for Sears?
It's not just a retail company. It's 4 or 5 different companies. And I know Eddie Lampert deeply wants Sears and Kmart to work, and I hope they do. But he's also an economic person, and he's going to give it the good old college try. But if he's not going to keep throwing money down a sinkhole in terms of losing stores that may have a higher and better use for the property, or for the parking lots, or for whatever the zoning may allow. And it's very, very analogous to Berkshire Hathaway. I mean, when Warren Buffett bought the Berkshire Hathaway textile spinning mills, they turned out to be quite a losing operation. He had a tremendous respect for the employees there, and he spent years trying to make a go of it with equipment or whatever. And in the end, he realized that he had to take the cash, the free cash that the operation was generating, and reallocate it for higher and better uses. And that's the way Sears is going to go.
I don't usually delve into our guests' distant past, but you grew up at one point being a bookie.
Ooh, who told you that? That's good. Well, statute of limitations are over, so you're okay. I'm okay.
I
was a minor.
You applied.
I did drop out of high school, but don't tell anybody.
No, I didn't know that. Did you drop out of high school?
Yeah, for about a year to be a bookmaker.
So what did you learn from being a bookmaker that you're applying to your investing strategy?
Perverse psychology of the human condition. How people behave, how they judge winning versus losing, the need for hope, how most people do not understand the nature of odds, how some things are multiplicative in nature rather than additive. I mean, for example, if you had to decide on a company, and that company there were 15 different aspects of that company that you had to think about, and you could be 95% correct on every one of those aspects, you still have about a 50-50 chance of winning, probably less than 50, probably 45% chance. So I learned about odds, I learned about the people and their hopes and dreams and drudgery of work, and the perverse psychology that makes people make stupid decisions. And I was lucky in that I learned it at a young age, and said, it's time to move on. But when I went back to high school, it was sad because it took about 15 years for me to get back to what I was making when I was about 15 years old.
I think you've made up for that since.